Hey everybody, hope we are doing well and welcome back to another Sunday session video. If you're new to the channel and you don't know what this is by now, it's pretty much just where me and Luke, we both pick a couple of markets to run through, show you our analysis and show you how we're preparing to tackle that market in the coming week. So if you're not already, make sure you're in the LAGFX Learning Lounge. We are growing the community every single day and I guarantee you will want to be a part of it. On top of that, we throw through updates of this analysis through the week. We show you how we're looking to tackle it, how we're looking to potentially place positions. So there's definitely a lot of value. Get yourself involved. Regardless, I am going to be jumping into the Great British Pound, the US dollar. I'm going to be doing a full top down on this market. Now, usually I'd pick multiple markets and run through them very quickly, but you don't get to understand where I've collected my story, my bias from. But this time, I'm going to show you exactly how I've come to the conclusion I have and why I'm looking to tackle a market the way I am. So starting off on the monthly, this is the highest I would ever go. Now the reason I wanted to start off here is because we can see that we've had a break of structure at this level. Now what this break of structure indicates to me is that moving forward we were going to be bearish. Obviously price has played out, so we already know it has done so. Now what we probably would have expected here is that price was to trade all the way back up, mitigate the last buy to sell up here. Of course we can now see price didn't have enough demand to do that, and when it then came to break this structural low, putting in a new lower low, we know that now the high up here becomes a protected high and we no longer have to worry about this zone. So another break of structure. As we zoom in, we can then look inside of this region, and I personally would have argued that our zones were this last buy, or as we know this one's already reacted, but we could argue that it was also this buy in here. Now the reason I would have argued that is just because this wick comes to mitigate positions in here. So the only two regions to me that look unmitigated is here, where we have a heavy buy to clear all liquidity before a large impulsive move down with some market inefficiency below. Same thing happens here. We have a nice push up, clears all intermediary liquidity that was built, and then we have an inefficient market just beneath. So this correctional wave comes back up, fills in market inefficiencies whilst also mitigating the zone. So if we were to use the 3-box strategy, this would be our impulsive wave. We would have had the both of these zones marked out as areas of points of interest, as areas of supply zone. We would have had alerts set at the both of the zones, waiting for price to tap, and then when it did, we'd then be looking for entry confirmation. So I'm going to go down to the weekly, and we can see inside of here we have seen a distribution potentially. We see that we've had a lot of liquidity built in this region, this last move that clears liquidity before we then continue lower. So what happens when we move lower is we get another break of structure, which means that this move here becomes our next impulsive wave. This high becomes a protected high, and then this low down here becomes a protected low. And then this low down here actually becomes our final target, with the assumption that the bearishness is to continue. We'd therefore expect that this line right here is where price wants to come and surpass. So that is our final target. That is a break of structure. And then we could have looked inside of here and argued, right, well, where are our points of interest? To me, that is this last buy. Now the reasoning behind that is because, as we stated when we looked inside of this, we had a lot of this intermediary liquidity build up, and then this move had the purpose of clearing it all before a heavy move down. We know that it's smart money presence because straight after that move has happened, we have had a very sharp impulsive wave. Now when we do see this, it is because the smart money operators are ready to take price lower, but they need to bring price up, clear that liquidity, build enough supply in the market to make that move happen. Once they have done everything they need to, they can then start activating their shorts and taking price lower. So this becomes our point of interest. We see that price obviously traded us up into it. We then look inside of this region and argue again that we've had Wyckoff confirmation, with this being a distribution. So if we go onto the daily and just look inside of this, you'll see that As we always want to see with a distribution, we have a lot of liquidity built, price pushes through, we then reverse, we displace the sign of weakness, we displace the low. After we then displace the low, we see price begins being bearish, actively protecting the highs and actively breaking the lows. So we could follow along price. Obviously, we could sit here and try to identify every single impulsive wave. We don't need to do that. We just need to see the one as of recent. So what we've seen here is this low has been broken. And therefore, to me, this impulsive wave is the one that we want to be looking at right now. So that is our first box, our blue box. We understand that at some point, price is going to want to put in a correctional wave. And when it does, we just go down the time frames. We can then look for which areas inside of here are unmitigated, which areas does price need to come back up to before it can continue lower. Now, the highest point would be this buy to sell up here, which, as you can see already, I have an alert set out for, with the expectation that this zone may hold. Now, the reason I don't really like the idea that there could be a zone in here is because we never saw any of this liquidity get cleared before the move lower. So what we've got is we've got a nice area of liquidity here, and in my eyes, price would probably like to blow through to clear that liquidity and then come and mitigate this. Now, had we seen a move such as this, where we saw it blow through and then continue lower, this is probably the zone I'd be looking at taking. However, we of course have not seen that, and therefore I'm not going to worry myself too much with that, and instead we're just going to wait for price to potentially trade us back up to here. Now we can go lower again. Inside of this impulsive wave, we know that this in itself is another impulsive wave. Obviously, this was the previous wave lower. We have this lower low in the market. Price trades back up, mitigates positions, distributes, and then once it breaks that low, we know that this up here becomes a protected high. So this would be marked out as our next impulsive wave. And then if we look inside of here, if we drop down onto the 1 hour, turn this into a blue box for the impulsive wave, and then we look inside of it and we can argue that we're either going to see price A trade us all the way back up to here into this supply zone, dependent on how much demand is introduced to the market. If not a lot of demand gets introduced, we may only be able to see price reverse back up to this region here. You can see I've already got 2 zones drawn out, my alert's already set, waiting to see where price taps, because all we're expecting now is for price to trade us back up, tap into one of these, and then take its next impulsive wave lower. Now we can go lower again just to try and analyze this market further, and we can argue that here we can see that after this impulsive wave, the volume and spread has begun to diminish. It seems as if price has been unable to surpass this low in the market and continue this intermediary bearish run. It seems like price could be now getting ready to run this high. If we see it surpass this high right here, that would be a displacement. We could then look to try and trade price up into this region. So the second we see this high broken at this region, we could then watch price try and do something along these lines. We see it break. We then see price trade us into a demand zone, that we get involved in a buy position to take us into the supply zone, where we then potentially see a distribution, where we can then get involved in a sell to take that next impulsive wave down. So this is exactly how we go about creating a story in the market. We now understand exactly what we need to see to get involved. We understand that shorter term, we can look to be a buyer to trade price up into the supply zone. Medium term, we can then be a seller to continue the intermediary bearish structure. But then longer term, we understand that we want to see price trade us all the way down to this final target down here. So being involved in any short positions from now is a great idea, because we can look to hold maybe 10 to 20% of that position all the way down to here. Regardless, that is going to conclude my section on these Sunday sessions. As I said, I would usually go through multiple, but I wanted to spend more time on one market, show you exactly how I go about a top-down analysis. And all I've really done here is just looked at structure. I've not used any indicators, any special strategy. I've just analyzed the structure of the market. I've told myself what I believe that structure is telling me. I've created a bias, I've created a story through the use of the 3-box strategy, which to me just has the purpose of reminding yourself exactly what it is that you found in your analysis, highlighting your impulsive wave, highlighting your points of interest, and then finding entry confirmation. But without further ado, I'll pass you over to Luke, who's going to run through a few of the markets himself.
Thank you, James, for handing me over and showing the guys your full top-down analysis on the Great British Pound to the US dollar pair. I think it'll be very interesting to see how this plays out this coming week, and hopefully we can capitalize on some great profitable trades. Now, moving on, we're going to run through some pairs that I am looking to capitalize on this week. But first and foremost, I just want to run past the Euro CAD. I'm going to give you my thoughts and tell you exactly what I think is going to happen this week with this pair, and also give you a little insight on a trade that we actually placed on Friday. Now, I am going to make a top trades of the week video on this pair with this trade, as it was a brilliant trade and it's something that is still actually running. So we should have that video out on Monday, so tomorrow. If not, then it'll be later on in the week. But yeah, as I say, this was a brilliant trade that we took full advantage of, and it was basically down to it was a simple market structure. So if we're looking here on this pair, this is on the 1 hour time frame now, so we can see here how we have the swing high up here, we swing low. Now, I'm not going to dive too deep into the market and do a full top down as I usually do. I'm just going to be quite brief. So this is a bearish market and has been for a long period of time. So we can expect to sell into the market, and we want to sell into market as that's our bias. We want to trade with the trend and not against it. So we can see here that we've got the swing high, the swing low. Price has come up to retest. Now, our confirmation with that was with the Fibonacci. So if I just show you this quickly, grab the Fibonacci, mark our swing high to swing low. We can see how we had a perfect reaction and rejection off the 50 ratio. So that was our first piece of confirmation and confluence. So then what we did is we waited for price to displace. If I zoom in a little bit here, we can see how price came up, set a high, came down, set a new higher high, but then we had this displacement as price broke this level. If I was to go down on lower time frame structure, let's have a look here. We can see how there was a low set. That low was broken. That was our first piece of displacement. That's an extra piece of confirmation to tell us that the market is actually going bearish. We then waited for price to come down. It trailed. It came back up to set a new lower high. And this is exactly where we entered. We then went down to the 1 and 5 minute time frames, waited for the right confirmation and jumped in. Now, as you can see, we currently have this trade running in some real good profits. If we just get the ruler tool, we can see how it's currently sitting at 151 pips, but it has actually tapped 209 pips. We do have a take profit of 263 with a stop loss of, I think I've refined it on here, but I think it was 29 pips. I did it from the peak high just to be safe. So it's here. We had a lovely risk to reward ratio of a 1:9, which, you know, me risking 2%, we could gain a lovely 18% return on this trade, assuming take profit is achieved. Now, why have I set my take profit there? The last low that was set in this structure, so we know that price can at least come down to this point before taking a reversal if, you know, it went on to set a new higher highs and bullish structure. We know that price could come down to this point at the very least. Now, what are my predictions for the coming week? Well, I am actually expecting price to break this low, as I believe this bearish structure will continue. I feel like there is no end to this bearish structure. I don't see why there would be any reason for it to come back up. So I believe price will smash through our take profit. Take profit will be achieved. It will continue to fall. Then we can expect a retest. With every impulse, we have to expect a retest. So it would look something like this. I believe, you know, we currently have a fractional retest at the moment. So this might come up slightly more. It'll come down, probably set a new low, might come up again. It'll break through this. Then we can expect a higher time frame retest. and then I think it will go on to set new lower lows and lower highs. Now, obviously, this is regarding fractal structure. This is just showing you the higher time frame structure. So obviously, within this impulse, within this retest up and this impulse down, there will be, you know, buy and sell opportunities within that. But yeah, as a whole, I think that this market is bearish. I am biased to a sell, and we are currently in on a position at the moment. I have closed 80% of my position just to be safe. I've moved my stop loss to entry, and yeah, now I'm going to wait for take profit to be achieved and then look to re-enter when we get another retest. So yeah, I mean, if you aren't in the Learning Lounge group chat, if you're not in the main group chat, I would highly advise to do so. I know James has mentioned it as well. But honestly, when it comes to capitalizing on these positions, we love to do these Sunday session videos as they're very informative and we can give you some good information and a good insight on what we're predicting. But the Learning Lounge group chat and the main group chat is exactly where we have these specific entries and we put more in-depth analysis in as well. So yeah, just to summarize on this pair, I am bearish. I want to sell into this pair and I will be looking for those sell opportunities if and when I can. So moving on to the USD CAD pair. Straight away, I'm trying to find my bias on the higher time frame structure. Now, looking here, we have had a very bearish market. Price has come down in a strong bearish manner, giving us clear bearish structure. So we've got lower highs and lower lows. We've then had a low set on the higher time frame. So this is the high set and this is the low set from this swing. And ever since, we have seen bullish structure. So we have seen higher highs and higher lows being set into the market. Now, if we go to recent time, or more present time, should I say, we have seen price range within this area, giving us no clear direction. We've had a manipulation here, and I'd say this was a manipulation as well. People are said to believe like, right, okay, well, if price is broken below, it's broken out of this range, we'll look to go bearish. They have obviously been manipulated, price is then broken through, and it now looks to me like it's going to start setting more bullish structure, essentially. Now, just going back to the higher time frames, I think we have plenty of room to play around with, and we have plenty of opportunities to be able to get into these buy positions. I would like to see price trail up from this point, maybe come to set a new lower high, and then hopefully break this lower low here. But as of present, now looking on the day, we can see how it is clearly bullish, and we want to be taking full advantage of that. So what are my thoughts for the moment? Well, we've seen price range, so we've had plenty of buy and sell orders being put into the market. People have been taken out here, people have been taken out here, and then we've seen a nice impulse up, what looks to be a retest, and I'd like to imagine price go on to set a new higher high. Now, if we can get confirmation from that by using the Fibonacci, so marking the start to the end of the impulse. This gives us our golden ratios. We zoom in, we can see how we've had a clear reaction off the 61.8. This is great news to us. This is another piece of confirmation that we need. Then if we go down to the 1 hour time frame on the 30-minute time frame, we are looking for bullish structure. We can see that. So we've had the low set, we've had a high set, sorry. We've then had a higher low. And obviously, price has broken above this high here, so we can expect a new higher high to be set, basically. Now, when it comes to entering in on this market, when and where will I be looking to enter in? Well, in order for me to enter in, I would want to see some kind of displacement on the higher time frames. So for price to break this bearish structure, going down on this retracement. So we would basically want a previous lower high on the higher time frames to be broken, so this being this here. So as soon as we see price come up, break through this, that is our confirmation of new bullish structure. Now we can expect price to retest as it does. Like I said earlier, whenever we see an impulse, we can expect a retest. So price may come back down, not breaking this low here, as this is now a structural low and a protected low. And then we can expect price to go on to set a new impulse and a new higher high. Now out of this, where would I be looking to enter in? So we would get our confirmation from displacement taking place here, so price breaking through. So that is our confirmation. We would then wait for confirmation that the retest has finished. So once this retest here has finished, we'll be looking to enter in. So I'd like to say I want to get a sniper entry. So I'd look to enter somewhere around here if I could. But if, for any reason we need extra confirmation, we need to see fractal bullish structure, we may enter somewhere around here, but we'll try and get in as early as possible. Now, when it comes to setting our stop loss and our take profit, if we did manage to get a lovely entry here, that would be brilliant. We could be really safe and set our stop loss here, just underneath this structural low on the higher time frames. Or you could set your stop loss above the new low that was set here, but obviously that comes with a little bit more risk as you are using a tighter stop. Now, when it comes to a take profit, well, this was the last high that was set, so we can expect price to break above that as this is bullish structure. So we can expect this high to be broken. But if for any reason price wanted to reverse, or the trend was going to reverse, we could just play it safe and we could set our take profit just below this point. Now, yes, realistically, price should break above, so we could set it above that. But just to be safe, we can set it somewhere below. So let's say 145 pips. So with 145 pip take profit and a 16 pip stop loss, that gives us a lovely return of 1 to 9. Now, if we wanted to do it below this structural low, just to be safe, it's still a 1 to 2.7 RR return, which is still brilliant. We can capitalize on nearly 6% equity gains from this. So that sums up the USD CAD and my analysis for that. Now we're just going to move over to the last pair that I'm looking at. Now the last pair that I'm looking to capitalize on this week is the Euro Great British Pound. So as we can see on the 4-hour time frame, if we zoom out onto the day time frame as well, we can see how the market is very much bearish. We've had a break below this point here. That's confirmed bearishness on the higher time frame structure. So that gives us a brilliant bias to sell into this market. Now, if we look at the 4-hour time frame and the 1-hour time frame, we can see here how we were waiting for displacement. We had that displacement, we had that break below, that's great. Now we can expect price to retest. Price has retested. We can see how there was a low set here, which followed with a high. Price came down, price set a new high, price has come down, price has then set a lower high. Price is now broken below this low that was set. This is displacement. This confirms bearishness in the market. So we can expect price to come down and start setting some new lower lows and lower highs, hopefully. So what I would be expecting is, if I just get the path tool up again, we can expect price to come down, maybe slightly. It would come back up. It could come up anywhere. Obviously, it won't be breaking these highs that have been set here, but it will come up and then it will come back down and go on to set that bearish structure, hopefully. So just to summarize, we are looking to go short on the Euro Great British Pound. We are just waiting for the last piece of confirmation, price to retest and jump in, quite similar to the USD CAD and also with Euro CAD as well. We just need those extra pieces of confirmation before jumping in. We don't like to impulsively trade. We like to wait for price to come to us and deliver how we expect it to. And upon doing so, that is when we look to enter. Now, we have the exact same bias for both Euro base currency pairs. So the Euro Great British Pound and the Euro CAD, we are expecting to go bearish on this. We're expecting to go short. So this tells us that the Euro is actually quite weak in comparison to other currencies. Obviously, if it coincides with other pairs, that's great. That gives us more confluence and more confirmation. This can be done, and we can look at the strength in currencies by using heat maps. If you don't know what a heat map is, I'd recommend going to our website, go into the client area, and if you scroll down, you'll be able to see the LAGFX heat map. This is live, and it shows you the strength of these currencies in comparison to each other. And it's just a great way of getting extra confirmation. Again, I did mention this earlier, But if you do want to see an update on our analysis, so both mine and James's analysis, head over to the Learning Lounge group chat. You won't regret it. It is completely free of charge, and we update our analysis throughout the week. If you have enjoyed this Sunday sessions video, don't forget to give it a like. All the support is very much appreciated. And if you have any feedback, if you have any questions, please put them in the comments below. We love to read your comments and we love to read your feedback. It's what helps us grow and develop as a business. And if you guys haven't subscribed, go ahead and hit the subscribe button, put the notification bell on so you don't miss out on any videos that we upload in the future. Again, I just want to say a massive thank you for watching, and I'll catch you in the next Sunday sessions video.